button before you refresh your charts, before you place your next trade pause. Take one slow, deep breath. What I'm about to share with you has the potential to become the most decisive 30-day period in your entire trading career. I'm not using hyperbole here. The vast majority of traders believe the market itself is the primary adversary. They point fingers at brokers, blame sudden news events, curse bad timing, or simply call it rotten luck. After years of observing thousands of accounts, the uncomfortable reality becomes crystal clear. The single greatest barrier standing between you and sustained, repeatable profits is not the market. It is your own psychology, your impulses, your fear, your greed, your hesitation. Every premature exit, every oversized revenge position, chase into a move that's already exhausted, every rule you bend, just this once. They all originate from the same place, an untrained mind. Picture this instead. You wake up tomorrow and step into your trading desk with zero emotional interference. You see a setup, evaluate it coldly against your checklist, enter with measured sizing, the trade according to plan, and exit, whether for profit or loss, without the slightest tremor in your pulse. Losses register as neutral data points, merely tuition paid for experience, are allowed to run as long as the structure supports them, free from the itch to snatch profits early out of anxiety. That level of calm, deliberate execution is what separates the tiny percentage of consistently profitable traders from everyone else. And that exact transformation is what the next 30 days can deliver. This is the 30-day Trading Psychology Mastery Challenge. It is not another indicator course. It is not a promise of secret chart patterns or a get-rich-quick system. The sole purpose is to re-engineer the way your brain processes market information, handles uncertainty, and executes decisions under pressure. Over the coming month, every trading-related thought, every emotional spike, every mechanical action will become intentional rather than reflexive. You will move from being a passenger carried by mood swings to the driver who chooses the response. You will stop being yanked into trades by FOMO. You will stop freezing when drawdowns deepen. Stop turning small losses into account, threatening disasters through revenge behavior. In short, you will begin to understand why some traders appear merely lucky while others print money month after month. The consistent ones have learned to master the only variable they can truly control. I can already hear the inner dialogue many of you are having right now. I've tried mindset stuff before. Journals, affirmations, meditation apps, always slip back into old habits. I understand completely. The reason those attempts usually fail is that trading psychology cannot be improved in a vacuum. Candlestick formations or moving average crossovers is comparatively easy. Anyone can memorize rules. The traders who survive and thrive for years are rarely the ones with the highest IQ or the fanciest software. They are the ones who have constructed iron-clad mental routines that shield them from their own worst tendencies. Today I'm going to hand you a structured, daily roadmap to install those very routines in just 30 days. What this challenge will deliver. By the end of these 30 days you will pinpoint the precise emotional triggers that have been quietly sabotaging your edge for months or years. Install a repeatable pre-market mental preparation sequence so you arrive at the open already centered and focused. Cultivate genuine patience, kind that lets high probability setups come to you instead of forcing mediocre ones out of boredom or desperation. Develop the ability to accept losses mechanically without the spiral of self-criticism or the urge to make it back immediately. Manage winning trades with discipline rather than greed, securing profits systematically instead of watching them reverse because you held too long hoping for more. Eliminate FOMO-driven entries and overtrading sessions that bleed equity through commissions and poor risk-reward ratios. Shift your self-image from struggling retail trader to calm, process-oriented professional. Make no mistake, this process will feel uncomfortable. Your brain has spent years wiring itself for instant gratification, emotional reactivity, pattern-seeking shortcuts. It will fight back. You will have mornings when the temptation to skip the journal or ignore the pre-trade ritual feels overwhelming. You will have sessions where a single red candle triggers the old panic loop, and you'll wonder whether any of this is working. Those moments are not signs of failure, are the exact crucible where real change is forged. Professional traders are not born during winning streaks. They are born when emotions scream the loudest, and the trader chooses discipline anyway. If you follow the daily assignments with honesty and consistency, you will experience a shift no back-tested strategy or premium indicator can produce on its own. You will become someone who is resilient under pressure, patient in uncertainty, and ruthlessly consistent in execution. Most importantly, you will gain sovereignty over yourself and therefore over your trading results. So if you are tired of being controlled by fear, exhausted from letting greed hijack your plan, ready to stop outsourcing your success to chance, then commit to the next 30 days. Only job during this period is to master yourself before you attempt to master the markets. The journey begins today. The hard numbers, why most traders fail. Confront an uncomfortable statistic head-on. Independent studies conducted over decades across brokers, regulators, and academic researchers converge on roughly the same figure. Approximately 90% of retail traders lose money over any meaningful time horizon. 90%. That is not a typo or an exaggeration pulled from marketing material. It is the statistical reality. The common explanation traders give themselves is that they lack the right strategy, the best platform, insider knowledge, or sufficient starting capital. When you examine the accounts of those who do succeed consistently, you rarely find revolutionary systems or genius-level chart reading. What you find instead is boring, repeatable process executed without deviation, protected by exceptional emotional discipline. Why does the gap exist? The overwhelming majority of participants trade on emotional autopilot. 4 primary forces drive most decisions. 1. Fear. When price moves against the position, the amygdala lights up, rational risk management evaporates. Stops are pulled wider, positions are closed at the worst possible moment. Trades are avoided entirely even when the setup is textbook. 2. Greed. When price runs in favor, the dopamine hit is intoxicating. Traders add to winners recklessly, to break even too early, or refuse to exit because could go much further. Profits that should have been locked in evaporate on retracements. 3. Hope, the most insidious emotion. Position drifts further underwater, and instead of cutting it, the trader tells themselves it will come back. Hope replaces evidence. 4. FOMO, the deadliest of all in the age of social media and instant price feeds. A stock gaps up, a crypto pumps, a forex pair spikes. Suddenly the trader feels compelled to participate even though no setup exists. FOMO turns disciplined plans into gambling. These 4 forces are universal. Every trader feels them. The difference is that failing traders obey them, successful traders observe them, label them, and choose a different action. The 6 most common psychological traps. Name the specific behaviors that keep the 90% trapped in a cycle of frustration and capital erosion. 1. Impulse trading, a fast candle, a breakout tweet, a volume surge. Sudden movement creates urgency. The trader dives in without confirming structure, ignoring risk parameters. Impulse trading is speed, dating with your account. It almost always ends badly. 2. Trading, after a loss the ego demands justice. The trader increases size, shortens time frames, or hunts for the next setup with vengeance rather than objectivity. Venge trading is the market's way of turning 1 loss into 5. 3. Overtrading, the belief that more screen time equals more profit. Traders take 10, 15, 20 positions a day thinking they are active. In reality, they are leaking edge through commissions, spreads, and emotionally compromised decisions. Quality always trumps quantity. 4. Of discipline, the plan exists on paper or in a Notion doc, but when live price action arrives, rules bend. This time is different, becomes the most expensive sentence in trading. 5. Fear of being wronged, fear of loss. Traders move stops tighter to avoid pain, exit winners prematurely to secure profit, or skip valid setups entirely because the last loss still stings. Paradoxically, the harder they try to avoid loss, the more they invite it. 6. Overconfidence after wins. A winning streak breeds the illusion of control. Risk gets increased, rules get ignored, positions are taken without justification. Overconfidence is simply fear wearing a mask of arrogance, and it sets up the next large drawdown. These 6 patterns appear in virtually every losing account. They are not character flaws, they are predictable human responses to uncertainty and variable reward. The good news: they are predictable, they can be systematically dismantled. No holy grail indicator, no ultra-precise entry signal. Paid mentorship will protect you if these mental leaks remain unaddressed. Your psychology is either your greatest asset or your most expensive liability. Day Trading Psychology Mastery Challenge exists to flip that equation. The 30-day roadmap detailed day by day. Day 1, emotional baseline audit. Open a dedicated trading journal. Down every emotion that surfaces when you think about trading right now: fear, excitement, dread, boredom, greed, shame, hope, confusion. Be brutally specific. Next, your 3 most recent trades and identify the dominant feeling before, during, and after each one. Pinpoint recurring triggers. Awareness is not sexy, it is the bedrock everything else rests upon. Day 2, pre-trade clarity ritual. Before the session begins, sit upright, close your eyes, and complete 3 cycles of box breathing. Visualize 3 perfect executions: 1 entry, 1 management, 1 exit, win or lose, performed exactly according to plan. End by stating aloud or writing, "Today I trade process, come." This short sequence begins rewiring your nervous system for calm focus. Day 3, meticulous trade journaling. Log every trade with surgical detail: entry price, stop price, target, position size, RR, setup rationale, time of day, session mood before entry, any deviation from plan, post-trade emotion. Review yesterday's entries tonight. Patterns will emerge faster than you expect. Day 4, patience enforcement day. Rule: no trade unless it matches 100% of your written criteria. If nothing appears, you stay flat. Celebrate staying flat. Skipping mediocre setups is active discipline, not passivity. Count how many trades you avoid today. Each one is a small win. Day 5, pure observation. In front of live charts but place zero orders. Watch price action unfold. Notice every time the urge to enter arises. Label it silently. There's boredom. There's revenge from yesterday. Let the urge crest and fade without action. This builds the muscle of non-reactivity. Day 6, fear of loss inventory. The answers to these questions in detail. What is the largest drawdown I can emotionally tolerate this month? If I lose 1% today, how will I feel tomorrow morning? If I lose 5% this week, will I still trust my process? Then define exact rules to keep any single loss inside your tolerance. Fear shrinks when it is named and bounded. Day 7, mechanical loss acceptance. Today, every trade must have a hard stop placed at entry, and that stop is never moved except according to a pre-defined trailing rule. When price tags the stop, the platform for at least 30 minutes. The goal is to feel the sting of loss without letting it trigger secondary destructive behavior. Day 8, greed management on winners. Focus on open profitable trades. Follow exit rules religiously: partial scaling, trailing stops, time-based exits, whatever your plan dictates. Resist the voice that says, run further. Locking profits systematically is harder than most traders admit. Day 9, FOMO isolation day. For 24 hours, any setup that does not match your exact criteria is forbidden, even if it's moving violently in your predicted direction. Label every temptation, FOMO, and let it pass. Moves without regret is one of the highest leverage skills in trading. Day 10, evidence only trading. Trade exclusively on observable facts: price structure, volume confirmation. No hunches. No, I feel like this could be the one. No revenge from prior sessions. If it isn't on your checklist, it doesn't exist. Day 11, minute emotional reset routine. Create a portable reset. Close eyes, 3 deep diaphragmatic breaths. Repeat silently 3 times. I trade what I see, not what I want. Use this micro routine anytime emotion begins to cloud judgment during the session. Day 12, first deep journal review. Read every entry from days 1 to 11. Highlight moments of discipline in green, moments of emotional hijack in red. Write one concrete improvement for next week based on what you see. Reflection turns experience into wisdom. Day 13, pressure visualization. Spend 10 minutes imagining the most stressful market conditions you've faced recently: news spike, sudden reversal, choppy range. See yourself staying calm, checking your checklist, executing only valid setups, or staying flat. Mental rehearsal reduces real-time reactivity. Day 14, screen free trade analysis. Close the platform for half the day. Last week's trades on historical charts or replay software. Ask, was emotion present at entry? Did I follow rules mechanically? Mental rehearsal without live pressure strengthens clarity. Day 15, mid-challenge checkpoint, halfway mark. Re-read your baseline from day 1. Write a new emotional inventory. Note every improvement, no matter how small. Commit to the final 15 days. The hardest work lies ahead. Day 16, confidence through evidence. Review every trade of the challenge so far as if you were an outside auditor. Document instances we acted with clarity despite emotion. Confidence is not a mood, it is accumulated proof of competence. Build that proof brick by brick. Day 17, ironclad risk framework. Set your maximum risk per trade forever. Write it in your journal and on a sticky note beside your monitor. Never violate it. Small risk is the foundation of psychological freedom. Day 18, zero deviation execution. Today the rule is absolute: enter only when 100% of conditions align, exit only when rules say exit. Observe every temptation to bend. Choosing discipline in the face of temptation is where identity change accelerates. Day 19, radical detachment practice. Treat every open PL as neutral information, not a judgment of your worth. If price moves against you, breathe and say internally, price is doing what price does. If it moves in favor, detachment severs the link between outcome and self-esteem. Day 20, drawdown simulation. Visualize 3 consecutive losers. Feel the discomfort rise. Visualize yourself sizing correctly, stopping out calmly, waiting for the next valid setup. Journal the emotions that surfaced. Resilience is rehearsed before it is needed. Day 21, trading plan refinement. Audit your current strategy. Remove rules that are consistently broken. Strengthen rules that are consistently followed. A 1-page pre-trade checklist that must be completed before any order is placed. A plan you actually follow is worth more than a perfect plan you ignore. Day 22, session mental rehearsal, 10-minute guided visualization of an entire trading day pre-market prep, waiting for setups, executing with calm precision, wins and losses without emotional spike, closing the platform at session end feeling neutral. Repetition builds neural pathways. Day 23, market, as river meditation, sit for 10 minutes, breathe slowly. Picture the market as a wide, fast-moving river. You are standing on the bank, watching currents, eddies, waves, never jumping in unless your exact conditions are met. Cultivate inner stillness amid outer chaos. Day 24, internal mentor activation. Anytime fear, greed, doubt, or impatience appears, and ask, what would the most disciplined version of me do right now? Then do that. You become your own coach. Day 25, identity declaration. A one-paragraph description of the trader you are becoming: calm under fire, patient in chop, ruthless with rules, indifferent to single outcomes. Read it aloud every morning and before every session. Act as if that identity is already true, because behavior follows identity. Day 26, discipline automation check. How much easier certain actions feel now compared to day 15, waiting for setups, honoring stops, journaling without resistance. Discipline is transitioning from effort to habit. Celebrate that shift. Day 27, noise filtering mastery. Ignore headlines, Telegram pumps, Twitter hype, volume spikes without structure. Focus exclusively on your plan's criteria. Tension drifts, gently return it. Filtering noise is a superpower. Day 28, winning pattern reinforcement. Revisit your 3 best trades of the challenge. Analyze what mindset, preparation, and execution made them successful. Write those elements down and commit to replicating them deliberately. Day 29, real-time emotional observation exam. Treat every emotional spike as data. Label it instantly. Greed rising, fear contracting chest, impatience in fingers. Feel it fully. Choose the disciplined action anyway. This is proof of rewiring. Day 30, integration and new baseline. When the session ends, sit quietly for 15 minutes. No screens. Reflect on who you were 30 days ago versus who you are now. Write a letter to your day 1 self describing the changes. Then write your new emotional baseline, the feelings, triggers, responses that define you today. You have not finished the journey, you have only begun walking it with intention. Life after day 30, the long game. The 30 days end, the work does not. Mastery is not an event, it is a direction. In the weeks and months ahead, you will notice cascading effects. Morning routines become non-negotiable sacred time. Drawdowns no longer trigger despair, they trigger curiosity and process audits. Winning streaks no longer inflate ego, they trigger tighter discipline. You begin mentoring others because you have all the answers, but because teaching cements your own learning. Trading stops feeling like a battle and starts feeling like a craft. You will still feel fear, will still whisper. FOMO will still knock. The difference is that now those emotions arrive as familiar guests rather than dictators. You greet them, name them, and choose differently. The market will never care about your feelings. But when you stop needing it to validate your worth, when you stop outsourcing your emotional state to candlesticks, you trade from a place of quiet sovereignty, then the probabilities begin to compound in your favor. You have just completed the hardest and most valuable work any trader can do. Keep the rituals, keep asking the hard questions. The version of you that emerges is not lucky, it is deliberate. And deliberate traders, over long enough horizons, tend to end up on the correct side of that 90-day 10 statistic. Welcome to the minority. Keep going.